はい、皆様お待たせいたしました。続きましては、オンチェーンデータが解き放つ市場の民主化をお届けいたします。Our next presentation is Onchain Data and Democratized Markets. それでは早速こちらの方々にご登場いただきましょう。Let's welcome our guest panelists. From Nansen, Mr. Alex Svanevik, and from Dragonfly, Mr. Haseeb Qureshi. May I ask both of you to please come up to the stage? それでは皆様お二人がご登壇します。どうぞ拍手でお迎えください。Let's welcome them with a big round of applause.
All right. I feel like we're supposed to fight. This feels like Fight Club energy.
That's right.
Okay.
Gets knocked out first.
Let's do some quick intros in case you don't know. So this is Alex Svanevik. He is the CEO of Nansen. He is a very avid shit poster online and probably one of the biggest influencers within the space of looking at on-chain data and understanding the big trends happening in crypto.
Thank you. And this is Haseeb. He is a, I think, ex-poker player.
That's correct.
He is also a VC, quite successful VC. He's even sent me a couple of deals over the years.
That's right.
It's been very fun. He runs a fund called Dragonfly, which I think has 1 foot in the east and 1 foot in the west.
That's right.
Is that accurate?
Very good. Very good.
All right, awesome.
So we are here to talk about the future of markets and about data and the way in which data is changing its role within crypto. So Nansen, you guys work very closely with data. You're one of the biggest data providers in the space. Tell me, since you started Nansen, how has all the stuff around AI changed your business? Because I remember back in the day when Nansen was first starting, it felt like we just did not have a good grasp of all of the on-chain data. Like this, I think it was early in DeFi summer when you guys first launched. Is that right? Or like the first early innings of DeFi?
That's exactly right. So one of the kind of reasons we started Nansen was I felt that you had companies like Chainalysis that everyone knew, but no one in crypto actually had access to Chainalysis. You had to be like an exchange or a bank or a tax authority or something like that. So I felt we should create a product for the man or the woman in the arena, right? And when we started, the first thing we wanted to tackle was this very specific problem, which was to label addresses, right? Because you can get the on-chain data from a public node. That's relatively straightforward. But it's very hard to know who actually is behind each address. And when we started doing this, literally, it was me and a spreadsheet in the very beginning. And we've obviously evolved quite a bit from then, and we've labeled 500 million addresses, just to kind of give you an idea. And interestingly, right now, most of the labeling we do is agentic. So it's literally, for every address that we want to label, there's an AI team that goes out, does all the research, comes back, has a discussion in a committee, and says, the three of us think that this is Haseeb, and 2 of us aren't quite sure. So we're giving this a confidence score of 60%.
Wait, you say there's a committee. Is this a committee of AI agents?
That's right.
So there's all of this is happening among AI agents.
That's right.
Okay,
correct.
That's crazy.
That's it. Yeah. So in the beginning, it was literally me and a spreadsheet. Then, of course, we scaled it up to be more algorithmic, but still deterministic. Some machine learning in it, for sure. That was kind of actually why we called the company Nansen AI in the first place, because we knew we were going to do a lot of machine learning to label addresses. But now we've basically, after GPTs came out and so on, we've really just doubled down on the agentic playbook. You can now actually, even in the UI, trigger a research on an address, which is pretty fun. If we haven't already labeled an address, you can click a button that's called Deep Research, and you get a report of who we think the address is with the committee results and all that stuff. So it's pretty cool.
Wow, okay. So when people are tweeting like, oh my God, the Ethereum Foundation is dumping, this person's dumping, it's you guys at the center of it labeling those addresses with your AI agents.
That's right, yes.
Okay, that's wild. So one of the things that kind of strikes at the heart of is, okay, it's great to have all this AI intelligence coming in and labeling the blockchain and helping us understand trading signals and market participants and all this stuff. Doesn't this also pose a conflict with respect to the privacy of being on chain?
Yeah, this is the kind of recurring question I often get.
Yeah.
And I think you could view it as like a bug or a feature of the blockchain.
Sure. What do you view it as? Do you think it's a bug or a feature?
I do think it's a bit of both. I think it's obviously, due to the nature of our company, I think it's mostly a feature, right? That's why we do what we do. And so I think when, SBF is saying that he's, closed withdrawals from FTX, but then we see on-chain that there's money flowing out of his wallets from FTX. To me, that's a feature, being able to see that, right? You could get a lot more transparency. If you see someone, shilling a token, and then you go on-chain and you see them actually dumping it, right? That's a feature in terms of getting transparency for investors. I think when you look at consumer behavior or like consumer use cases like payments, it starts becoming tricky. You obviously don't want someone to see everything you're buying day to day. And so I think you need to have a solution for that. But I think overall, we've been leaning into, obviously, the transparency of blockchains, and we think it probably net has more good things than bad if you compare it to traditional finance, where I think you have too much opaqueness, actually. That's why you have so much regulation, because you can't actually get the transparency from a bank, so you have to regulate them, right? But I think we're probably going to see solutions for privacy, and you're seeing some of it now. You're seeing L1s that are focused on it. You're seeing like Aztec protocol, layer 2s, et cetera, et cetera.
But doesn't the imposition of privacy kind of directly impede what you're describing, which is like the ability as a market observer to say, aha, I can see the dev is dumping. I can see that the foundation is dumping. I can see that this KOL who shilled me this token is actually dumping it.
Right, and so at the end of the day, it becomes a market decision, right? Where do market participants want to play?
Right.
Do they want to compete on a stage where maybe devs are dumping on them, but they don't know? Or do they actually prefer to be on the side where you have more transparency?
Right, okay. So we're in the world now, like it or not, where we have this transparency. We can see who's doing what at each time if you have an intelligence tool like Nansen has. Do you think that the advent of AI is going to make trading crypto as a market participant, do you think it's going to make it more efficient? Do you think there's going to be more alpha? Do you think there's going to be less alpha? Like what happens because of the introduction of all this AI into trading?
Right. So maybe just to kind of take a step back and make it really simple, right? When we think about efficiency, we're obviously thinking of the stock market is very efficient, right? There's not much information edge you can have as an individual investor. And I think what's compelling about crypto for a lot of people is that it's actually quite inefficient. That's what makes it possible to make a good trade. You have some information about something. It doesn't have to be insider information, but you've just done research and you've come to some conclusion that, hey, this token is going to go up, I think, on the next month or day or whatever, next hour. And so you buy it. And so I think crypto is interesting because it's an inefficient market, but it's also a very low transaction fee market, right? You can think of like real estate is also like inefficient, but it's high transaction cost. So you can't just go and say, this property here is, priced off, I'm going to buy it and flip it tomorrow. It's not really possible. And so when you think of AI, what it does ultimately, I think, is just give the retail investor like an Iron Man suit. And so it basically levels up their capabilities to go out and explore the chains, right? And by the way, we named our company after a polar explorer. I don't know if you know that.
I did not know that.
And so we think of this as, we want to give the best tools to you as an investor. If you're in a harsh environment, MEV, etc., you want to have an Iron Man suit. You want to have X-ray vision, night vision goggles, potentially. And I think ultimately AI is going to be a force that primarily elevates the capabilities of retail investors. That's at least my view. Of course, you're going to get, like hedge funds are going to get better as well. But I think that the sort of marginal benefit probably is going to accrue to retail investors, in my view.
All right, so then paint a picture for me. The year is 2037, okay? What is the average retail investor doing with AI, and how presumably with a Nansen product?
Yeah.
What is that experience going to be like in 2037? What is trading going to be like?
So first of all, they're not clicking on dashboards.
They're not clicking buttons.
They're not clicking buttons, I don't think. They're not clicking on dashboards. They're not making their own dashboards. They're basically talking to something, a product, an agent. And this is going to happen way earlier than 2037.
Okay.
We normally talk about 2030 at Nansen as like, we should imagine what investing looks like in 2030 and then build that today. And so I think this is going to happen actually a lot sooner than people realize. But generally, I'm pretty short clicks. I'm short dashboards. I'm long voice, I'm long chat, and I think basically that's how people are going to be interacting with agents. I do think there's one thing to consider in this world, which is the human in the loop on each individual trade, right? Are you saying, hey, go and find me some tokens, I want to, buy a runner on Solana, and I want to flip it in the next 15 minutes. That's like a potential trade you might do on chain. And then you actually pick the token, and then you monitor the position, and then you have your hand on the wheel. That's like one mode. I think the next step from there is that you don't stay involved on each individual transaction, but you tell the agent, here's the kind of investments I want to make. Now you go and do it for me, and I'll check in once in a while, right? So both of these are, by the way, prompt-driven, right? If you're involved in the individual investment, the individual trade, you're prompting the agent. You're not looking at dashboards. The agent will probably show you charts to help you make decisions, but it's mostly a natural language-driven user experience. And then in the world where you've actually given it just an overall strategy, you've probably prompted it and you're telling it, like, take note of the mistakes you make, right, and the wins you make, and do more of the wins and fewer of the mistakes, et cetera, et cetera. And so one, I think, question this gets to is, at what point does the human exit entirely? And then what is the job of a retail investor? Like, what do we do? Not just retail, by the way.
I think a lot of them don't have jobs.
Yeah.
So, okay, let me push back on this vision.
Yeah,
let me push back on this vision. I think if you ask the question of, like, why are most retail traders trading at all? And I think the answer is that there's something about the experience of trading, of like the sense of having a locus of control, that it's completely up to me whether or not I make the right decision and I buy the coin at the right time, hold for the right period of time, etc. And I think most people know that, like, trading is hard and that nobody has a magic 8-ball to be able to detect the future. But it's almost a little bit like if fundamentally what people are doing is they want to feel the sense of control. It's almost like saying, like, look, if you had a really smart crypto guy that was your friend, somebody you trusted, maybe someone like you, right? You're probably many people's smart crypto guy. I don't think actually there are a lot of people who would say, I mean, there may be some people who might say, like, look, Alex, I know you know a lot about crypto. Why don't you take my money and go trade meme coins for me? Totally. And just, like, buy whatever you think is hot, sell whatever, and like, I just hope that you're going to make money. I think most people would not do that. They might give you some allocation and say, look, go do a safe investment, like, buy some Bitcoin, some Ether, whatever you think the good stuff is, but, like, don't go crazy. But yeah, the experience of, like, trading is very much around, like, wanting to feel in the driver's seat.
Totally. Well, let me push back a little bit, but also agree with this. So I think you're informed by a sample that is crypto native, right? The people you deal with are crypto investors, sure, and so on. So they want to be in the driver's seat. But there's like 100x or 1,000x more people who literally do not want to do this stuff, but they do want to have some kind of exposure to crypto. And we're all familiar with, like, family members and friends who do, show up, and they're like, hey, this Bitcoin thing, it's now like 115,000. Is this a good time to buy? Right? Those people probably would prefer to have some way to put money into crypto, but someone else manages it, right? But I think you're right on the degens and the people that we normally meet with in crypto, people who work in crypto or invest in crypto. We want to have a sense of being in control and having a hand on the wheel. And I've been playing around with some prototypes we've developed internally to try to build this flow, right? This kind of AI-first investing experience. And it's really interesting because you can feel very quickly where you feel like you're missing something before you want to pull the trigger. So the agent recommends, some tokens. You're like, okay, this one looks interesting, but what's the thing that's holding me back? And the very a basic example of this is the price chart. Like, it's very uncomfortable to buy a token if you've not looked at the price chart. Right. And I've been doing this now, we have a Nansen model context protocol, an MCP, which basically is like an app for AI products. I plug this into Claude, and I'm sitting in Claude and trading with Claude. And the price chart is like the first thing that I miss, which is an example of, like, you want to feel like you're in control. And I think this goes back to also, it can't fully be text-based. I think people do want to have visuals to help them feel comfortable with the decision they're making. So when I say dashboards are going to go away, I think they're going to go away in the sense that you're not going to have a static dashboard that someone else built for you. You're going to have visualizations that are generated on the fly. For sure, you need that, as long as the human is involved in making the decisions at least.
So here's the other place where I think I diverge from your vision of this, is that you say that you're short clicks. I'm actually quite bullish on clicks. I think clicks are, if you imagine what is the analogy of like why it is that we do use clicks, like why do we still use, like you probably have one of these, what is it, like, I can't remember the name of these products that allow you to dictate in natural language to your computer. And basically, like
Whisper,
typing completely. Yeah, Whisper. The Whisper model is one that's used locally to do this. And there's some people who do this, but it's actually quite rare that I see people who are completely going to voice and not using the keyboard at all. And a big part of the reason for that is that actually, for most people who are pretty good at typing, your bit rate, like just through I/O, is actually faster with the keyboard than it is speaking. That's not true for everybody. If your words per minute is relatively low, then
I don't think that's true for everyone.
Yeah, it's definitely not true for everyone. But it's very much true for navigating a UI. Navigating a UI by speech is actually quite slow. And the reason why, of course, is that a UI is actually a very high dimensional space. There's like all these little things you could be clicking at any given time. Whereas like specifying in language what you want is often quite complex. It's like, imagine you're standing over someone's shoulder and you're telling them what to do on a computer. But that's a lot slower than doing it yourself.
But you're assuming there is a UI.
Yes, that's true. That's true. So if you're just giving somebody a pretty broad-based task, then yes, that's definitely true.
I'll give you some examples that I've done with Claude in this little prototype I have. For example, I've found 3 tokens, and I'm saying deploy one sol into all of them. It's way easier with language,
right?
Than like go to Jupiter,
So I agree. I think well-defined, simple tasks for sure.
Yeah. Or balance my portfolio. That's another one.
Sure. So these are all very responsible things. Like what you're describing is like very safe, responsible, well-defined tasks. I almost analogize it a little bit to like, do you ever play SimCity?
Yes.
The city simulator game. So I'm imagining a little bit like, we talk about trading, right? Which of course most of the customers of Nansen are not rebalancing their portfolio. Like they're trading, right? They're trying to get alpha. And I imagine a little bit like, telling your AI agent, hey, trade for me. It's a little bit like, okay, I'm going to play a game of SimCity, but I'm going to like turn on the AI to like play the game for me and come back in a couple hours and like have a city. Yeah. And it's kind of like, well, then why even play why am I even playing the game?
You bring up a very good point, which is that crypto should not be seen as a subsector of finance, but of entertainment.
A part of it. I think a large part of trading is like the feeling that you get from trading. It's like if I could just turn it on autopilot, then the only thing I would care about is did I make money or did I lose money? Yeah. In which case, if I'm not reliably making money, if there's not truly alpha, then this is just like a crappy investment product.
Now, have you tried vibe coding? Like cursor?
I have tried vibe coding. Yeah.
How do you feel when you vibe code?
I feel pretty amazing.
Same?
Yeah, I love vibe coding.
And so,
but when it's small, when it gets big, and then it's actually really painful.
That's right. When you want to deploy it and stuff.
Exactly.
Add Google authentication. But don't you think we can recreate that feeling with trading?
I think it is possible. I agree with you. I think there's a lot of mundane stuff that you can abstract away from the trading experience. Not a lot. There's some. But a lot of what people really enjoy is the feeling that they're actually getting some alpha.
Yeah. I think a lot of it is about eliminating friction in the process. Like the coding, for example, it's like, oh, I have to go and look at Stack Overflow. How do I do this? But the AI in a vibe coding world just allows you to bypass that. It just does it for you, right?
Right.
So another example that I had recently, by the way, none of this stuff is investment advice. I was buying Circle puts.
Oh.
And I'm not really a very good options trader. I don't have a lot of experience in that world. So I thought, why don't I work with the agent to find the right strike price and expiry, right? And I just told it, here's my thesis, here's why I want to buy it. What do you think? And here's a screenshot of all the pricing from this table, right? And it's like vibe options trading. And again,
definitely
not
investment advice. Definitely don't do that.
Definitely don't do that. But it's an example of eliminating friction from a flow where I would have to go and like educate myself on options trading. I'm not saying that you shouldn't do that. That's
Right.
probably a good idea to do if you want to do options trading. But in the moment, it wasn't a really big trade, and I just wanted to like actually buy the puts, and it sort of allowed me to overcome that hurdle in 2 minutes.
So okay, totally agree. Let's change gears a little bit, and let's talk about airdrops. So airdrops have been in the center of a lot of debate in the crypto community, and obviously Nansen gives and sheds light on a lot of airdrop-related data. So there's been this big debate within the crypto scene about whether or not airdrops should continue to be one of the predominant ways that tokens are distributed to retail. The old way, let's say over the last year and a half, has been that almost every project, when they go to mainnet, if you're using the chain, if you're using the testnet, if you tweet about it, you get some tokens. Increasingly, people are starting to believe that actually airdrops are not very effective, they don't have very good user retention, and that instead we should be moving back to ICOs or some kind of crowd sales. From your position, with all the data that you see at Nansen, what's your view on the world of airdrops?
Actually, the most fundamental issue I have with airdrops is from a product perspective, because I think airdrops potentially dilute the signal in product development. And when I started building Nansen, I did sort of the inverse of an airdrop. I charged people to use the product, right? How controversial, how crazy that you would pay for a product. And the reason we did that, it was not necessarily we wanted to make so much money on day one, but it was to test whether people actually want this product and if they're willing to give up something for it. So the problem I have with airdrops, the biggest problem is actually that you're paying people to use a product, and that means you're not necessarily getting the signals you need to see if you have product market fit. So that's, I think, on the one hand, sounds very obvious, but I think it's a deep incentive problem we have in crypto. On the other hand, I do think that the good thing about crypto is that it offers a chance of kind of distributing ownership to the community of users. So I still think you need something like airdrops, right? And I think there are ways to do airdrops well. I do think of it a little bit as like antivirus or something, where there's an arms race and you kind of have to update your model every time. You can't just do the same thing because then people start exploiting it. So the Uniswap airdrop worked, but it would never work again in the same way, right? So if you think about the data, I mean, it's very easy to see. I think people should actually take more advantage of this and see which wallets are holding on to their airdrops and which ones are just mercenary and farming them.
That's a very interesting perspective. Why hasn't anyone done that yet?
It's a good question. I mean, some people have done it a little bit more carefully, and we worked with Layer 0, for example, for their airdrop. We helped them with some research there. We also helped Arbitrum with their airdrop, some research on how they should do distribution. So I think you can do this, but it's the sad reality is that, and this is a little bit dark too, I think a lot of founders are not necessarily incentivized to build for the long term in crypto, right? It's very easy to be like a single cycle founder, where you just create something, you create the token, you unlock your tokens and then you're out.
Yeah.
And I think we should try to create systems that don't incentivize that kind of behavior.
I mean, I'm very bullish on that idea, actually, now that you bring it up. I don't know why I haven't heard this before, but the idea of rewarding people who hold on to their airdrops seems kind of obvious. It's the same reason why, people, there's been all these IPOs lately that have traded way up above the IPO price in the US, right? So Circle, Figma, also very famously, massively underpriced IPO. And there's been all this talk about like, hey, are the investment banks and the IPOs, are they kind of screwing over the companies that are going out to market? And traditionally, like companies have always understood that the IPO pop implies that the people who are buying in the IPO, the institutional investors, are getting kind of a good deal, right? And traditionally, founders are actually okay with that. They want them to get good deals because they know that people like Franklin Templeton or Fidelity or whoever that are buying in the IPO, they're long-term institutional investors, and they want those long-term institutional investors on their cap tables alongside retail investors who will buy into the IPO. And the question is like, okay, why is it that we treat institutions differently than retail? The answer traditionally is that, well, retail is fickle. They're going to dump. They're not long-term. But if you can actually just filter and go on chain and look at the data and say, okay, here is the subset of retail that actually is long-term. And we're going to reward that in the future. And like the next airdrop also rewards the long-term people, and the next airdrop also rewards the long-term people. And people learn that is the way in which you farm airdrops, is by actually being a long-term holder of these tokens. That sounds like a great way to break out of this cycle that we're in.
By the way, incidentally, Nansen has a program called Nansen Points.
Oh.
Which has something called permissionless rewards, where you can input your address and receive things. And of course, because we have all of the on-chain data, we can see what to do with the airdrops. So
interesting.
Yeah.
Okay.
Agree with you. I do think it's a good idea.
I'm gonna tweet about this. This hasn't occurred to me until now, but it seems.
By the way,
it
is interesting because you're right that we do this already with like angel investors and VCs in crypto.
Right. That's right.
Off-chain. If someone gets kind of a reputation to be a dumper, you wouldn't want to have them on your cap table.
Yeah.
Right? So we already do this. Why not do it at scale for retail investors as well?
Yeah, I mean, at this point, the way that airdrops work is that basically every retail investor is treated the same as long as they make it past these 7 criteria or whatever it is. But there's no distinction made among them.
Yes.
And that feels like a mistake. That feels like something that can be improved upon. But okay, but let's zoom out and come back to the meta level question, which is, do you think that airdrops, relative to crowd sales, are the future of how tokens are going to be distributed?
I think some version of airdrops, I think they will both exist and they both have to evolve. It's hard for me to pick one or the other. Sometimes it makes sense to raise funds through an ICO.
When does it make sense to do an airdrop?
When does it make? Well, when you really benefit from having a decentralized ecosystem, right?
Isn't that everybody? Who doesn't benefit? Who doesn't benefit from a decentralized ecosystem?
Okay. I'm trying to come up with an example. Like, let's think of an exchange. Does an exchange need to have very decentralized, as opposed to like a protocol that has, let's say, stakers, and you want the stakers to be decentralized?
Sure.
You kind of need to make that decentralized. You don't want like one person to control that network, let's say.
Yeah.
Right? So I think when the decentralization actually is something that helps the security of the protocol, which in principle should be everything in crypto, but in reality is not, right? So I think, when you want to decentralize very broadly, then airdrops could potentially make sense.
It does feel to me, though, like the meta has shifted in such a way that what used to be what you just described, which is that, well, everybody in crypto should care about decentralization. It does not feel like that's true anymore.
Agreed.
It feels like the vibe has changed a lot. Probably the newer generation of crypto that's come in within the last year or 2 years, I don't think they feel the same way as the old guard does about decentralization. And a lot of this, I think, has gotten typified for me by Hyperliquid. In that for Hyperliquid, so I think most people know that Hyperliquid runs all of their validators out of a data center in AWS Tokyo.
Nansen runs the validator too.
Oh, hey, there you go.
The biggest one besides the foundation.
The biggest one, very, very good.
Besides the foundation.
So all of them run, I guess you can speak to this, they run out of AWS Tokyo. And you have to be in that data center. If you're outside that data center, your latency will be too high, you'll get kicked off the network. So every single validator runs in AWS Tokyo, and everybody knows this. And
I'm not sure we run in AWS, actually. I need to double check that.
Is that not AWS? I'm pretty sure it's AWS.
I don't think we run that.
I've heard it's AWS Tokyo. And so everything runs in one data center. And back in the day, I remember actually Dfinity was the first blockchain that I remember that they proudly announced that all of their validators run in a single data center. And people just stomped on them. It was like it was a laughing stock of crypto. People were like, "Oh my God, this is so undecentralized. It's so ridiculous. How can you be proud about the fact that it's all running in a data center?" And now people are actually proud that Hyperliquid runs out of a single data center.
I don't think that's what they're proud about with Hyperliquid. I think they're proud that it's fundamentally a fucking great product.
It is a very good product. It's a very good product. But I think people defend the decision in a way that they did not defend the decision in previous eras. And that does feel to me like the user has changed and the philosophy of those users has changed. And so it might just be, I sort of pose this as a challenge to you, it might just be that like you and I are just old.
It could be, yeah. I mean, so I have two views on that question, actually. I think one part of it is that the younger generation kind of doesn't really care. They're just here to trade meme coins and have fun and make money.
Yeah.
That's one aspect. I think the other aspect is that not everything needs to be decentralized. Now, I'm not talking about Hyperliquid in this instance, but if you think about the stack of something in crypto, I think the lower down in the stack it is, the more decentralized it needs to be, because that's other people building on that part of the stack. But as you get to the front ends, for example, I don't think they need to be decentralized necessarily, unless there's like a regulatory or security reason for it. But I think that's maybe the other thing where like decision making in terms of DAOs. I think we have like DAO fatigue at this point, right?
Yeah.
We went through this era where like everything needed to be a DAO and everyone needed to vote on every decision, which is just moronic, right? Like anyone who's run a company or run anything knows that that's a terrible way to make decisions.
Right.
But we felt that everything needs to be decentralized, and so
the pendulum has swung back.
I think so.
And now I think there's more sense of like, hey, founder mode and like taking control of a protocol that's rewarded. That's
yeah, and that's to me is a good thing. That part is a good thing, I think.
Okay. So if that's a good thing, then like what do you think the equilibrium ought to be, right? If you take a look at Ethereum. Ethereum obviously this year has staged a comeback, right? And this comeback is largely centered around like, basically three people, which is, Vitalik, Tomasz, and Aya Miyaguchi are like the three central figures in this drama.
Yeah.
And it's like basically because of those three people, Ethereum, and then Tom Lee is probably the fourth. All right, four people. And because of that, Ethereum has like 3x its price.
Yeah.
And that seems to me like not what we thought Ethereum was supposed to be about, is three people.
But don't you think it's also Ethereum waking up to smell the coffee that actually you do need to centralize some things?
Yeah.
Decision making and like execution, competition requires some degree of centralization. You can't have this like kumbaya thing where everyone gets to vote on every decision. It just doesn't work in practice. Like anyone who's tried it knows it doesn't work.
Yeah, I agree with you. So is your sense then that we got to get with the times, you and I? We got to let go of some of this decentralization, complaining stuff, and just understand it's all about founder mode, you're picking a direction, and gunning for it.
Well, maybe it's like some kind of Hegelian process of like thesis.
That's a very fancy word.
Antithesis and synthesis.
Wow.
Right.
Wow.
So, what is the synthesis? I do think that you obviously need decentralization at the lowest layer of the stack in terms of operating the chain.
Yeah.
The four people you mentioned can't halt Ethereum, like the chain, right? But they can make decisions on what to invest in, where to put the money of the foundation, and so on and so forth, and that makes sense. But at the end of the day, I think the actual infrastructure, the blockchains, the protocols need to be able to operate without any individuals, standing in the background and pushing the buttons.
Right. So how would you rate then what Ethereum has actually done over the last 3 months? Like, how do you feel about where Ethereum is now with respect to that? Again, taking control of the.
Yeah, I mean, I was like one of the people that got lumped into the ETH fudders category on Twitter because I was quite negative to Ethereum. A lot of that was actually driven from literally looking at the on-chain data and observing that they were actually falling behind. Yeah. Literally, like transaction fee revenues, DEX volume, active addresses, transactions, like all of these different metrics. Solana was actually beating Ethereum.
Yeah.
And so when I look at it now, I'm observing that Ethereum is not just coming back in terms of the price action, but also on these on-chain metrics.
I thought it was not coming back, but just Solana has fallen down below it.
No, they are actually coming. I mean, they're not back to the heights of the exorbitant fees we would pay during NFTs, DeFi Summer, for sure. But in terms of overall activity, it is actually growing. Right? Yeah. Maybe not transaction fee revenues, actually, but that makes sense because you've spun off L2s, which takes a lot of the fees. Solana year on year is still up tremendously in terms of transaction revenues.
Right.
But it's not. But it sort of peaked around
like
December,
flat, basically from a year ago.
Yeah. But so I think I think it's great to see what's happening with Ethereum, and I think like the people who probably are going to get labeled as ETH fudders, a lot of us actually just cared about Ethereum. Like we wanted Ethereum to succeed because it is such a promising project.
That's a good rebrand. I like that.
I still hold my ETH, and all that stuff. It was pretty painful for a while.
Nice.
But that's I think they're in a good place now.
Now that ETH is dominant, everybody has to explain how they loved ETH all along.
Yes, exactly.
I like that. I like that.
Do you think you were in the ETH fudders category?
I was. I was pretty late to not liking Ethereum, and then I think I was early to calling the Ethereum turnaround.
Okay.
So I think I I was surprised at how far Ethereum fell relative to Solana because I did feel that the activity going around in Solana was probably not sustainable, given that it was so concentrated in meme coins and they didn't seem to be able to effectively diversify their overall transaction flow.
I think Solana is now finding a new path, though, and I think they're doing a lot on things like tokenized equity, etc. I think there's a lot of things that are very exciting beyond just the meme coins.
Yeah,
Solana.
fair enough. Okay, so we're about to wrap up. Give us one underappreciated data nugget that you feel like not enough people know, but is kind of out there in the data trenches. This is alpha to close.
This is a very just a fun one. Do you know which chain generates the most revenues from fees?
Is it Tron?
It is Tron.
Okay, yeah, I did know that. Give me real alpha. That's too easy.
Oh man, real alpha. I'd have
Real
to check
alpha.
Nansen. I have to bring up the screen here.
If you just make something up, I don't think I would know.
I can hallucinate like an AI, right?
That's
what we
perfect.
do.
That's perfect.
Yeah.
Give me the AI response.
Yeah, all right. Well, last time I checked, all the on-chain metrics indicated that Pudgy Penguins is going to 200 ETH.
Wow, you heard it here first. Excellent. I think
Not an investment advice.
We're up on time. That's a wrap. Thank you so much, everybody, and thank you, Alex.
Thank you.
Okay, thank you very much, Mr. Svanevik and Mr. Qureshi. We'll now have a photo shoot with the two of you, so please stay right over there. それではこれより写真撮影を行います。ゲストの皆様もどうぞよろしければ携帯カメラをご利用いただき写真撮影を行ってください。Okay, big smile, both of you. There we go. A little closer together. Yeah, there we go. Show some love here. Great, thank you both very much. ありがとうございました。